Hey guys, good morning. It is Monday, 19th September. It's about 6:45 in the morning. Huge week this week. FOMC meeting Tuesday, Wednesday. So Wednesday at 1400, we'll get guidance on the path forward for the interest rates from the Fed, and Chairman Powell will be speaking at 1430 on Wednesday. So I'm gonna start off today with this chart. AJ Monty posted, the market guys on YouTube posted this a couple weeks back. And the reason I want to bring this up, sorry about that. All right. I have mentioned this before and a couple days ago, but I want to reiterate this. So notice this red line. It's the second year of a new Democratic president, which we have right now. And, the first part of this, we kind of went more straight down versus popping up, so that wasn't as accurate. But starting here is where things get kind of funny. So we did set that low in mid-June on this. It's got mid to late June, set the low, then rallied up July, retraced a little bit, then set a new made a high in August. Sorry. So that's what we did. We came off the lows, then made a high in mid-August. Came back down early September. Came back down in early September. I mean, it's not exact, but then, we popped back up. Popped back up mid-September, popped back up mid-September, and now going down. So if the past is indication of the future, we could retest that low very shortly in mid to late September, which we're at the 19th now, and then possibly rally, get another bear market rally, and then before the election, set an all new low for the year. Which brings me to the longer term chart on the S&P 500. These are the COVID lows down here. I like how this channel looks because we've got test here, test here, test here. But the reason I really like the channel is just the mid channel, how it acted as support and resistance on all these touches here. So I have confidence this is a pretty legit channel. So if we do set a low in late October, let's see the 25th of October, that would be around 3,400. So just keep that in mind. If we come back really quickly here, retest this low around 3650, 3630, and then get another bear market rally, keep that 3,400 in mind. If we get that low, who knows? It could happen. All right, yields are up this morning pretty substantially. Let's see. Oh, Dixie. Let's see the Dixie real quick. Go back to my other charts. I've got a clean chart and a not so clean chart, and these are my not so clean charts. So I revised this trend line from Friday. The previous trend line was more like this. So price ended up breaking out above it, and now it's testing this new trend line. Always update your charts as price updates. But if we see yields keep rising, I would assume that Dixie's going to keep going up. The 2-year just continues this move. It broke out of this high here, and it's just continued to move up. 10-year is retesting that previous high, and that previous high once again corresponded with the market lows. So this is never good for equities when yields are creeping up. Oil has broken its trend line again, so we could probably do something like this here. Ooh. Let's see if that new trend line holds. This trend line could have been off slightly. So we'll make this the new trend line. We did kind of touch that there, so. If this trend line breaks, I would expect this 80.62 to be tested. That's a weekly level I pulled off the chart. Something to note, the Biden administration put out Friday that they're going to start filling the SPR if oil gets below 80. So that might put a bottom in the floor, or that might put a floor here for oil in the short term. If investors and traders know that they're going to start buying at 80, then they might start buying at 80. Gaps created and filled on Friday. All right. Let's see. Let's go back to my clean charts here. So SPY created a gap Friday and did not fill the gap. And it did not fill the gap below from mid-July. The same with IWM, which is the Russell 2000 ETF, tradable ETF. It has a gap here. No gap below, like the other three indices that I'm going to talk about, but it did create a gap above, and it's got, well, that doesn't have a gap up there either. The other ones do. The diamonds, it initially created a gap, filled it, has a couple gaps above. When we finally break out after this bear market, pay attention to these. I'll keep them on my chart until that time comes. It might be a while. The Qs, it filled the gap that was created in mid-July, and it filled the gap that was created on Friday. Let's look at the Qs, because I did trade this one, and I had posted on Discord when I sold. I was holding puts overnight, coming into Thursday morning, and I actually sold like right at the bell. Let's see, 9:30. So I sold here. My initial target was going to be these two red lines here, because that was the gap from mid-July. We opened up below that. So my next point was going to be this 28628. I'm sorry. Yeah, 28628. So that's about where I sold. And this thing bounced up and down a few times. So I sold half here. A couple minutes later, I just sold the other half. And I was like, you know what? This thing looks like it might be finding the bottom. So I just got out. And it did. And I posted that on Discord that I was trimming, and then that I was cutting all the position. So we'll see where this thing opens up today. It looks like it's still fighting this area. For me, today, if I enter put positions, I'm going to wait for this 28562. I want to see that break, because that is the start of the uptrend on Friday. So if you go to, the fractal nature, if you, on these lower time frame charts, it doesn't look like it. It looks like, oh, well, that's a red candle or whatever. But as you go out in the higher time frames, like you can see, that's the start of the uptrend. So that's what I'm targeting. Let's see. Ethereum. Let's talk about Ethereum. I think I'm hitting everything that. Oh, the Qs, I made a comment Friday about tech getting hit harder. There's nothing against tech or whatever. It's just they have the higher PE multiples right now, which as rates go up, the things with higher multiples are going to get hurt the worst. Ethereum. Hopefully this video is not too long. So yesterday, about 5 o'clock, this thing just started selling. And I got an alert. I was just hanging out doing some studying here, and I got an alert on 1387 when this crossed. So I really started watching it just because it's fun. I'm not trading crypto, but charts are charts are charts. So it was just fun to watch. And then this level here, you can see the levels on my chart, like how price just kind of interacts with these. There's really a science to this. Like, look where this low hit. This, when it broke, how it interacted here, how it interacted with this trend line. So as you guys get good at placing levels where they're supposed to be, it'll really help you out with buying and selling, where to buy, where to sell. So first touch on this, if this comes back down, price comes back down and retest is more likely to break now. First touch is like 90% chance of failure on the first touch. So just keep that in mind. I think that's it for today. As always, on Omnitech Discord, hit me up if you have questions, or on YouTube, make a comment or whatever. If you want me to take a look at a chart, or have questions about anything I've said here. Once again, I am not a financial advisor, so make your own trades, use a stop, and good luck, guys.